now.
This meeting is being recorded.
All right.
Sorry about that.
Thank you.
Thanks, Susan. Appreciate it.
Thanks.
All right. So to kick us off, I'll provide some background as to who we are, and by we mean Recurrent Energy, and what my team sort of does to sort of set the scene around where we fit into the energy transition landscape. I'm currently looking after the commercial function in Asia Pacific for Recurrent Energy. Recurrent Energy is an 80% owned IPP backed by Canadian Solar in BlackRock. The BlackRock investment is one that actually just materialized earlier this year. It positions us rather advantageously as far as having a AAA rated gargantuan equity provider to underpin our growth globally. In terms of who we are, we're currently active in 39 different countries. I think we're the most international renewable energy developer that's out there. And in terms of size and scope, we're currently number 2 in the world around solar and BESS development. To give an idea for scope and scale, there's 29,000 megawatts which we're expected to deliver in the next 18 months, which well and truly places us at number 2 globally. BlackRock is also the owner of a few other renewable energy businesses. And once we amalgamate all of those businesses together, which is something we do anticipate happening, well, we would be well and truly head and shoulders number 1 globally in terms of well, just about every metric, but around development size, pipeline, megawatts under construction, and so forth. Just trying to get this here to flip. There we go. Sorry, there's a bit of a lag. In terms of what we do, and by we, I mean the commercial team I work at, we operate in a whole bunch of geographies in Asia Pacific, but our core markets in Asia Pacific really are Australia, Japan, South Korea, and Taiwan. We've got other operations in jurisdictions like New Zealand, Philippines, Malaysia, and Thailand, as well as India. But our core markets, where we tend to spend the bulk of our time in Asia Pacific, really is those 4 shown on the bottom right-hand side of the screen. Our commercial team actually covers a pretty broad scope. So we undertake structuring activities, and by structuring, I mean we put together PPAs. We structure bespoke transactions, whether it's hourly green, firmed, an optionality inclusive transaction, a hybrid transaction between solar, wind, and storage. So structuring is something that we take the lead on for the company within the region. We're also in charge of origination, aka sales, in good old English, asset management, which means managing all of the downstream contracts post commercial operations. We're in charge of trading, both spot and forward trading. And those activities also include prop trading. We also look after growth. And by growth, we mean new technologies, things like hydrogen, which I'm happy to go into greater detail in this presentation, should the audience wants to speak a little bit about hydrogen as well. And then to underpin it all, we really have to do a really good job at market analytics to sort of understand volatility and understand where our exposures are, and to be able to do a good job around portfolio management and financial optimization. And then central to the energy transition really is energy storage. The biggest difference that we have in the energy transition relative to yesteryear really is the role that storage plays. It used to be that that energy was instantaneous, but increasingly more frequently as we step forward through time, energy storage is becoming an increasingly bigger part of the puzzle, of the energy transition puzzle here. Before we start, I always think it's usually a good idea to provide some color around Australia in terms of distance. So Australia is basically roughly the same size as the continental United States. It's actually very, very close in size to the continental United States. The maps might not always show so, but in landmass, they're pretty similar. However, one core difference between Australia and the United States is obviously population. Whereas in the United States, we have somewhere around 325 million people living there. In Australia, we're only 1/13 of that. We're roughly 25, 26 million people in a place the size of the continental United States. So what that means is a couple of really interesting things. So, for instance, Queensland is 2.66 times bigger than Texas. Western Australia, our biggest state, is 1.53 times the size of Alaska. We're roughly almost 4 times the size of Texas. And what that effectively does is it creates this really suboptimal investments from the point of view of economics, right? So the westernmost solar farm in New South Wales, for instance, is located here in Broken Hill, at the westernmost intersection between New South Wales and South Australia. But Sydney is roughly 1,000 kilometers away, about 750 miles away. That distance in the same region between Sydney, where the load center is, and Broken Hill, out here in the west, where the furthest away generator is in New South Wales, is equivalent to basically having a generator, a solar farm in Jacksonville to supply New York City. So to give you guys an idea of context, the western bit of New South Wales is here, where I'm hovering over. Sydney is here. That's the same exact distance just about as New York City to Jacksonville. Which then begs the question, comparing the United States to Australia, of would anyone in their right mind build a generator, i.e. a solar farm or a battery energy storage system in Florida for New York City? And the answer is no. But because Australia is so sparsely populated relative to a place like America, we do end up finding these really, really weird geographical choices because of sparse population once again. Oh, and for those of you who are interested, one pretty interesting factoid. I actually live down here in Hobart, southernmost state capital in the country. And to give you guys an idea as to how far away things really are, where I'm currently taking this call from today, we're actually closer to Antarctica than I am to Darwin, the northernmost state capital in Australia. So we're actually closer to Antarctica down here than we are to Darwin. And by way of comparison, this is roughly the same distance as New York City to LA. In terms of flying time and miles and so forth. Some additional context here. So what? Just to set the scene here. Here are the top 20 jurisdictions in the world in terms of renewable energy deployments. I think this refers to the time frame between 2021 and 2022. The United States, again, coming back to the theme of population, is currently sitting at number 2, having developed approximately 113,000 megawatts or 113 gigawatts of renewables over the same time. However, comparing that to Australia over the same time period launched or commissioned 26.8 gigawatts of renewable energy projects. Now, whilst that is roughly 4.2x bigger in terms of the deployment of solar in the U.S. versus Australia, let's bear in mind that the population of the U.S. is roughly 13 times bigger than it is in Australia. So, whilst the U.S. has put 4.2x more renewables in the ground than Australia has, on a per capita basis, the picture is pretty different. Australia would actually be, I think from memory, #2 in the world on a per capita basis. Yeah, so the numbers do look pretty different depending on how you start to slice and dice things. What that means is, yes, the US is obviously doing great. I mean, 113 gigawatts of new renewable energy capacity is an incredible achievement for any country globally. However, there's, I think the underlying message here is that there's still some work to do in terms of decarbonization and in terms of replacing existing dirty generators with clean renewable energy. One other thing of note that is probably worthwhile talking about is, once again, coming back to that theme of sparse population, is the nature of the Australian grid. Because I think something like 92% of the total population in Australia lives along the eastern seaboard of the country. What we end up having is not a lot of redundancies in the grid from a physical perspective, and a really long and stringy grid, which plays a significant role in having really high loss factors, low inertia levels in terms of system strength, and other technical parameters like that, all of which are issues that, whilst they're not necessarily endemic yet in the United States, there are some jurisdictions in the States where we would expect to have a misalignment between population, the grid itself, and where the load centers are. So just moving forward here, so again, we just touched on what the main Australian grid is. So the main Australian grid is called the National Electricity Market. The National Electricity Market spans from the top end of Queensland down to New South Wales, through to Victoria, via underground cables to Tasmania, where I'm currently located, and then over across to South Australia. Whilst our, I'll come back to some stats on the country as a whole later, but just walking through some of the features of the market. The market here is a gross pool, which means that all customers and all generators effectively buy and sell from the pool. In the United States, by comparison, it's a net market. A net market means that generators or utilities and customers bilaterally schedule transactions with one another. And then the spot market, whether that's day ahead or real time, is used merely for balancing purposes in terms of any deviations over and above that bilaterally agreed upon generation position between two counterparties. The other couple more pretty interesting differences. The market here trades in 5-minute intervals, which means analytics, data, and market analysis as a whole is extremely challenging, simply from a data volume point of view. To give you an idea, the National Electricity Market Operator, AEMO, is the largest data consumer in Asia Pacific. There is no other single entity in all of Asia Pacific that consumes more cloud data than the Australian Energy Market Operator itself. And then just to sort of wrap up the comparisons in terms of market fundamentals between the States and Australia, we are an energy-only market, and our prices range from negative $1,000 to positive $17,500 per megawatt hour. Now, these are Australian dollars, and oftentimes when we have discussions with market proponents elsewhere in the world, people are always pretty shocked about a couple of things. How can the prices be so negative? Well, the prices are so negative with a price floor set at negative $1,000 to provide fit for purpose market signals to generators. In other words, if you're a solar guy and there is an abundance of solar in places like South Australia, and you're generating in the middle of the day, you're very likely to be losing money. In other words, paying money to be generating, which makes no economic sense whatsoever. The high spread between a negative $1,000 floor and a $17,500 cap is there as a true proxy to market signals to dictate bidding behavior for market proponents, whether you're a generator or a load or anything in between, such as demand response. And then lastly, the final theme to sort of talk through this presentation here, and we'll jump around a little bit, but is this concept of renewable energy zones. So it used to be when I started that, what we talked about in the early 2000s was deregulation. Deregulation. Conversations in the early 2000s and even in the late 90s, as I understand, before my time, was about customer choice, ability to pick your supply structure, ability to choose your rates, choose your provider, and the unbundling of the electrons themselves versus the poles and wires. I think it's probably fair to say, in my view, that the world has moved on pretty significantly from those days, and we'll come back to that later in the presentation. But where we are today, coming back to this particular image here, is in a place where open access, in the same way that the United States has open access, and by the way, by open access, I mean any generator is able to apply for interconnection and subject to meeting the various compliance requirements, modeling requirements around interconnection, then anyone can access the grid. In Australia, at least, that system has basically arguably failed. And it has arguably failed because, like I said, because of the same issue we talked about in Australia, sparse population. So if I'm in Queensland here, where the main load centers are, if I'm a generator, I want to be as close as possible to the load center. Why? Because of impedance and because of losses along the way. So if I'm all the way up here as a generator, potentially here in this renewable energy zone, and my load center, my population center is down here in Brisbane, that's roughly 1,200 kilometers or so. I'm going to have massive losses, no matter how high my underlying voltage is between Brisbane and this particular renewable energy zone. So there is a moral hazard around things like free rider, positive externalities, whereby because open access enables anyone to connect anywhere, you get this really binary outcomes where you have really good projects close to load centers with low losses, and then as the grid gets saturated, there continues to be more and more competition for the next best thing. So if this part of the grid is full in terms of fit for purpose areas to build a solar farm, developers are starting to go here. As this gets full, developers then start to go here. So it's a little bit of a race to the bottom in terms of participating via the open access regime in a place like Australia, where the grid is long and stringy, where location means positive economics, but it can also mean very negative economics for a project. And then sort of moving on to some high-level trends in terms of the market itself. So here we'll compare sort of some high-level metrics between the U.S. and Australia. So the Australia as a natural resources powerhouse really has historically deliberately elected to use coal, which it has heaps of, as the major fuel feedstock for power generation. A lot of our coal-fired power plants were built, sometime between the 1950s and the 1970s. They are old and, quite frankly, clunky and falling apart, and very much reaching end of life, which is typically 50 years for a coal-fired asset. But notwithstanding that, because renewables delivered almost 40% of the national electricity market's total energy in the first half of 2023, renewables are here at the moment more economical than any technology. So if you're comparing gas, if you're comparing coal, renewables, and by renewables, I'm saying definitely solar, and to a lesser extent wind. Renewables are already in the money, meaning economical relative to thermal generation technologies such as gas and coal. Stepping back to sort of compare where we are as a country around renewable energy, we're somewhere in the 36 to 40% mark annually across the entire country for renewables. But we do have some really interesting parts of the grid, such as South Australia. In South Australia, we're basically already over 100% renewables. Yes, it's a small grid. It's probably 2,500 megawatts. It's at the very end of the grid here. But South Australia has the ubiquitous title of largest non-hydro renewable energy grid in the world at the moment. So there's been a lot of lessons coming out of South Australia, which have been repackaged and deployed federally at the national level here in Australia, and we'll touch upon some of what these lessons were and how these might apply to the U.S. Later in the presentation. The other sort of a mega trend that is very similar between Australia and the U.S. is energy consumption. What we're seeing here, which no doubt is exactly what we're seeing in the States as well, particularly in places like PJM, ERCOT, PJM meaning Pennsylvania, Jersey, Maryland, in that power grid, ERCOT meaning the Electricity Reliability Council of Texas, and CAISO in California, is the growth of AI. So what we're seeing here is data center after data center after data center being commissioned, and increasingly so, more and more hydrogen electrolysis plants also being commissioned. I think the data center theme in Australia mimics exactly what is happening in the States, but I would argue that what we're seeing here on the hydrogen and biofuel side of things is not yet what we're seeing in the States. So I think we're seeing a lot more happening here in that biofuels and hydrogen space than we are in the States. But the underlying theme of whether you're talking data centers or whether you're talking hydrogen is that these energy intensive technologies will effectively mean actual demand in the grid increases exponentially. The market operator thinks this increase will be something along the lines of 108%, meaning a doubling in electricity consumption, driven by other factors like EV charging, for instance. But in my view, I think this percentage is probably going to be closer to 200%. Time will tell who's right, but the trend is unequivocal. It's upward trending, and the rate at which demand grows will ultimately, in my view, be the key deciding factor that backstops the energy transition to 100% net zero or 80% net zero or whatever that might be. Other things we sort of see here that are a little bit different is rooftop solar. I think nationally we are at around 50% of households have rooftop solar in terms of residential customers. This is 48% actually, next little box over. And by 2050, the market operator sees approximately 97% of all vehicles being battery EV vehicles. Of course, this percentage is heavily driven by things like, how many Chinese different car making companies are coming down. Will they be cheap enough, and will there be any economic incentives or taxation incentives to drive EV forward? But to sort of wrap it up, we're probably 20% or so, if not 25%, ahead of the US as far as percentage of the grid that's renewable. Power consumption trends between Australia and the US, I think, are pretty similar, with the exception of hydrogen, which I think we're seeing more of here than what I'm currently seeing in the US. And in rooftop solar, whilst it's something we definitely see in places like California, given their aggressive incentives for rooftop solar, there's still, in my view, significant room to grow in the US for rooftop solar and battery, by the way, technologies. I was gonna potentially pause here and take stock of where everybody is at. Do we have any questions before we start? If so, please feel free to come off mute and ask any clarifying questions. I don't want to just keep racing through things if I'm losing people along the way. So if there's any questions, please feel free to ask.
Okay. Please ask your questions via chat box or via audio. If you do orally ask the question, please unmute yourself, or if you're muted, and ask the question, introduce yourself. So questions for Leo so far? Questions on material is covered so far. Leo, I have a question.
Okay.
You mentioned that it's Australia is almost 40% green energy, and so do you have like two peak demand in a 24-hour period, one in the afternoon, one in the evening?
So we've got in the second quarter of the year and the third quarter of the year, meaning in winter, we usually have a peak during morning rush hour and a peak in the afternoon. When because of less wind and less solar being on the ground, so volatility in Q2 and Q3 is typically two-sided. But Q4 and Q1, when we're at the very beginning of Q4 right now, it's typically just one peak during evening rush hour. This is actually my data tool. This is actually an interesting shape. So I'm not sure if it's too small here, but today, for instance, where we have two peaks. So this is just a live market price monitor for New South Wales, for instance. So today we spike in the morning at $300. We trough during solar hours at about -40, and then we peak again at around $300 in the afternoon, by way of example.
So for the peak demands during the winter seasons or winter seasons, are they? How do you meet the shortage of demand? Do you go with stored solar? There's a lot of storage that provides that.
Well, I mean, I think like in the U.S., we've got capacity reserve ratios, right? So, well, we don't have a 100% capacity, right? We have 115% capacity. Bearing in mind the biggest gap between supply and installed, between demand and supply and installed capacity. So the grid is designed to have a buffer, effectively, around generators. But in the event that doesn't happen because aging coal-fired plants tripped, or there was a trip in some power line or a storm or something, then there is demand response, and then there's other emergency procurement mechanisms available to the market operator as well. And then your last resort would be rolling blackouts and brownouts and so forth. But our unserved energy metrics is 0.02% of the time, which is actually one of the most onerous unserved energy metrics in the world. The US, I think, is 0.01. I think no, 0.05 from memory. I could be wrong, but 0.5% unserved energy, and I think we're 0.1% of unserved energy.
Good, thank you. Any other questions before Leo can continue? All right, Leo, you're ready. You can go on. Oh, 1 minute. I'm sorry. There's questions in the chat box. A couple of questions. Richard, Mac, the long stringy grid, is it up to the task to handle the growth of renewables? Do you have delays in connection permits like we have here in the US or limits in available capacity? And who pays to upgrade the grid? So several questions here.
Yeah. So these are all really good questions, right? I mean, this is exactly where the rest of the presentation is going. In terms of who pays, there is a whole bunch of different answers to that. There is the customer, there's federal, there is state, and grid. And I've actually got a slide on grid augmentation, so I'll save the rest for that. But yes, I mean, it's similar to the US. It's an open access grid. There are connection queues. We do lots of projects in the US. It's actually our biggest market. But to give you guys an idea, connection queues in places like ERCOT for California can be anywhere between 3 to 5 years. Ours here is probably 18 months or so, which obviously I think is better from the point of view of an investor. Means you have money out there and letters of credit and collateral sitting out there with the transmission network service operator for a shorter amount of time. We'll come back to the funding stuff later, but yes, it's an open access queue. And again, we'll talk about renewable energy zones later. But I would argue that the connection process here is more efficient and cheaper, especially from a credit perspective, than it is in the US. However, it's more efficient and faster than it is in the US. And we'll come back to some of the investment stuff later as well.
Okay, Leo, one related question from a student. How do current government policies support or hinder the clean energy transition, especially regarding grid stability and storage?
I've got a slide on that as well, so I'm going to keep moving and pick that up later. Pause on the presentation and pick that up later if that's okay.
Perfect.
But I like where this is going. Everyone is picking out the upcoming slides.
Good.
All right, I'll keep moving here. So this slide sort of begins to go into some of these questions. So this is basically what a market forecaster. I sourced this here from Aurora Energy Research, which is a well-regarded bankable curve provider operating both in the U.S. and Australia as well as elsewhere in the world. But this is generation and how generation is expected to evolve between sort of now and 2060, the end of the forecasting horizon. Wanted to make a couple of observations here because these will largely sort of parallel what's happening in the States as well. But so if you sort of look at where things are now and where they're going, a couple of things sort of really jump out. One is the most carbon intensive technologies, such as brown coal and black coal, are the first things to sort of leave the grid, basically. Coal is roughly being replaced by solar or rooftop solar and wind. So what you see in blue and in light blue and what you see in green is effectively what's replacing coal. But if you think around capacity factors, the capacity factor for wind in Australia is probably about 45%, 45%, depending on where we are. And for solar, it's probably 30%, depending on where you are. So what that means is, and let's just say that the blended average capacity factor between solar and wind is about a third. What that means is that you need 3x more renewables than you do coal to remain energy neutral. Why? Because coal is usually generally run as a baseload resource available 24/7, 24 hours a day. So in order to make up the energy shortfall between renewables and baseload technologies like coal, an overbuild in capacity terms is necessary to deliver the same energy. And you sort of see that really happening here. through this number here. So what the market operator is showing is 3.2x new renewable zero carbon technologies growing between 2025 and 2060. Again, that's a number that's completely logical because of that difference in capacity factors between coal and intermittent technologies. And then we're also seeing a lot of flexibility. I would argue that one of the top 3, top 4 themes in Australia, but also in the UK, in the US, and judging by some of the questions we've had here so far today, is that the role of storage obviously plays an integral role to the energy transition. Again, easy to generate instantaneously, whether you're solar or wind, but it's a lot harder to co-optimize the value of a portfolio of assets or a hybrid asset containing wind, solar, and storage, or solar and storage, or wind and storage. So in order to have the required flexibility, coming back to your question, Rudy, you really do need a heck of a lot of storage to be put in place for the energy transition to succeed. And in terms of putting a number to it, whilst we're expecting 3.2x more renewables to sort of offset baseload assets, we're seeing 4x more flexible generation required to be able to load shift power, i.e. Otherwise curtailed solar in the middle of the day to the back end of the day when volatility is highest and supply is lowest. So it's a story about flexibility, and it's a story about overbuilding capacity to deliver an energy neutral mix of technologies as you step through time and as the power grid decarbonizes. Another interesting slide here, and so this is New South Wales, this is Queensland, South Australia, and Vic. I've left my home state out of here for real estate purposes on the slide, but one of the key things that we're seeing here is that because solar is cheapest, solar is absolutely dominating the middle of the day. So what you end up getting is this shape here that looks like a duck. We call this the duck curve. So if you look at, and these are average intraday price shapes by year. So the light gray here is 2019, and then it sort of troughs in the mid 2020s in South Australia here, for instance. But then by 2040, the middle of the day goes back up. So this is a really, really interesting slide. What is it actually telling you? It's telling us that in the immediate future, we're expecting the depth of the duck curve, meaning the spread between the highest point and the lowest point, to widen through time. But like we're seeing in California, which just started, and this just started happening in April or May of 2024, as you put more storage into a system, as illustrated here by South Australia, where it's a pretty easy thing to witness, whilst the price spreads is arguably troughing in 2021, by 2040, we've seen demand come back up again. So what does that mean? What that tells me is that we're building solar as fast as we can. Build. But as we build more solar, we're actually cannibalizing ourselves here, meaning the next incremental generator that's commissioned in South Australia will receive a lower return in terms of dispatch-weighted prices than the generator before that, all things being equal. What that does is it creates a market signal, a price signal for storage. Because how does storage make money? Storage makes money through ancillary services. We'll put that to the side here for a second. We can talk about frequency, black start, inertia a little bit later, but also through energy arbitrage. So a storage technology will charge in the middle of the day and then discharge at the most volatile time period of the day. So if you're looking at New South Wales here, you would be charging when prices are lowest, and you would be discharging when prices are highest. So the shape change in the duck curve is probably your best proxy for how we expect a market to transition over time, i.e., when do we expect storage or other new loads such as data centers and hydrogen to come in. So the duck curve, bad for solar, but great for storage. What that has translated into from an investment perspective here in Australia is something that still hasn't happened in the States, which is we've basically had 0 standalone solar farms be commissioned in Australia, whereas in the States that still happens. All of our solar farms have co-located storage with them. Why? Because let's just examine South Australia here for a second. In 2021, the average solar price in South Australia is negative. You would be losing money. Why would you ever invest in a technology that is expected to lose money? So there is a whole body of work coming back to what my team does around market analytics and storage, around appropriately sizing storage to load shift that energy that would otherwise be curtailed because it's not economical to dispatch and then discharged later in the day, right? So if we sort of look at, let's just look at 2040 here, we're sort of at $180. And then the charging cost in 2040 would be roughly $60 here, which gives you $120 per megawatt hour as a spread. $120 per megawatt hour as a spread is plenty of energy ARB spread to pay for a storage asset. So the conversation is no longer about let's go and build renewables. It's about let's go and build a hybrid asset with appropriately sized storage so that I can appropriately manage my curtailment risk from negative prices. And this is happening everywhere in Australia, in every single market except Tasmania, where I'm currently located. We probably, alongside California in the States, have the steepest duck curves in the world. Spain is probably starting to go there as well, but it's still got a ways to go. But what I would say about both Australia and California is that the markets here and the California markets are nothing more than what I would say is expected to occur in, let's say, the Eastern Seaboard in the States in the years to come. We're sort of talking about the same sort of theme here. So this slide sort of goes through spot price trends and provides a little bit of a different view between the previous slide I just talked through and negative prices. So this is effectively a heat map or histogram showing price distributions for different price bands. So the dark brown colors represent high prices. Blue is basically negative prices, and gray is less than $100 prices. What we're seeing in every market, to illustrate the same point differently, is that the duck curve is effectively increasing through time the frequency of negative prices in every single one of our markets. New South Wales is obviously performing a lot better. There is less blue, a lot better from the point of view of a generator, that is. But South Australia, which is our most renewable region in the country, is significantly suffering from negative prices. Again, this means that South Australia will see a much faster influx of battery energy storage systems than a place like New South Wales. And what it means, again, for, I think, students here on the call today, professionals who are interested in this industry, is that, it's not just an engineering game around let's go and build a solar farm. It's about, how can I protect myself? What kind of contractual structures should I seek via power purchase agreements to hedge myself from negative prices to the extent that you can? How do I then size storage to enable sufficient load shifting? It's quickly becoming a norms race on analytics, which is a fantastic thing for a mathematics nerd like me. I love where things are going. But from the point of view of investors, however, this sort of scares investors away a little bit. I think a simplistic investor from a fund, for instance, looking for contracted cash flows with very little variability, those investors will absolutely hate what's happening in Australia, absolutely hate what's happening in California, and there is some level of scope to sort of protect investors or find some sort of way forward, whether it's through tax equity schemes, as is currently being done in the U.S. under the Inflation Reduction Act, or through other mechanisms. I think there's definitely room to provide additional comfort to investors somehow. And again, this is a topic I'll talk through towards the back end of the presentation. Quick overview of market reforms. So in the very top of the slide, we have our state-by-state targets. Similarly to the US, where things are very much state-driven, Australia is a similar jurisdiction. I think we've got both federal targets, which link back to the Paris Accord, but we also have even more ambitious state-level targets that are ultimately what we go after. So our target is 83% by 2030 at the federal level. So in the next 6 years, we're meant to achieve an extra 40% renewables. We'll come back to whether that's reasonable or not in the upcoming slides here. But Tasmania, for instance, has a 200% renewable energy target. It's a 100% hydrological pool with wind and solar starting off here. So the targets are more aggressive than they are in the states, but ultimately pretty much in line at a federal level to what's been agreed by the Biden administration around the Biden Accord. I think other interesting things that I'm seeing here, just in terms of high-level trends, again, we're seeing hydrogen become not so much a matter of economics, but more a matter around nationalization and reliability of supply. I think what we're seeing globally is jurisdictions like Germany. Germany is trying to buy as much hydrogen as possible in order to wean itself off of Russian-sourced gas. So what we're seeing in hydrogen is more and more support be put in place. That support is sort of linked to nationalization and increasing domestic localization of supply chains. We're seeing more and more market reforms that go to centralization of decision making, i.e. the renewable energy zones that I showed on the Australian map earlier in the presentation. And we're seeing, again, government interventions increasing more and more as a result of suboptimal market outcomes and suboptimal decisions around open access, to come back to one of the questions from the attendees here today. And then in terms of grid updates, upgrades, massive spend. We're up to 21 billion to date spent, and I think the total tab will probably be at around 200 or 300 billion. That's USD to augment the grid. But again, that's that's a $100 to $200 billion for a small country. On a per capita basis, that's a lot of money. Even though it pales in comparison to what the states are spending. I think the numbers I've seen from the states is somewhere in the vicinity of 2.5 to 4.5 trillion US dollars to augment the grid to support the energy transition. We'll come back to whether or not that makes sense later in the presentation. So what has this all meant? Are we seeing long-term savings from renewables? The answer is yes and no, from my perspective. So what we have here is a variety of forward curve scenarios, again, modeled by a third house consultancy called Aurora Energy Research. At the low level, and this is a net zero scenario, the more renewables you throw into the grid, the lower the prices are. So are renewables good for the end consumer? Do they lower the overarching cost of supplies from the point of view of the end customer? The answer, in my view, is an unequivocal yes. So if you look at the net zero scenarios or the government intervention scenarios, you see prices being lowest. But there are other forces here that, in my view, will contribute to these scenarios never eventuating. And I do think that those same exact forces will wreak havoc in the U.S. as well. We'll touch on supply chain, and we'll touch on resources to actually underpin and do the work for the energy transition later in the presentation as well. So can renewables deliver lower cost supplies? Is that better for the end consumer and the environment? Absolutely yes. Is it going to happen? Probably no. I know, come on to that later. Next, I wanted to sort of talk through customers and how do our customers, and by our customers, I mean the data centers we sell to, or a manufacturing facility that we sell to. We typically tend to sell contracts through something called a power purchasing agreement, or a PPA. And I thought this was a really good slide to sort of compare and contrast attitudes locally in Australia, customer attitudes locally in Australia, to those we see elsewhere in the world. So price, as you can see here, interestingly, high price is the lowest response. Price is the last thing the customer cares about, meaning what we're selling is already more competitive than thermal technologies. So we can, back to my comments earlier, we can already sell our customers a contract, a fit for purpose contract that is more cost effective, all else being equal, than thermal supplies. And that's very much being reflected here in survey responses by customers themselves. However, given the high interest rate environments, developers like myself have the view that sometimes prices are too low. Interest rates have been a very difficult item to navigate through. The cost of doing a project has sort of gone up by over $15 a megawatt hour. I'd say probably closer to 20 as a result of foreign exchange, but mainly interest rates of themselves. The other couple of items I sort of wanted to touch on is policy uncertainty, which is a key theme here. So I would argue that Australia has probably done a fantastic job around things like energy, as far as things like creating fit for purpose markets for emerging technologies. I think the same can be said for places like California. California has procurement targets for renewable energy developers and their utilities. California currently picks winners, but Australia, I would argue, is probably more laissez-faire than California, and probably much more in line with freedom and open access and other concepts that we see more frequently in the rest of the states, i.e. non-California, than we do in California. But however, at the same time, I would argue that because we're such a different country to the U.S. from the point of view of having that stringy, long grid. Coming back to a question earlier, we talked about, how do we deliver system security? Because we've got so few people and loads are sometimes so far away. We've got system strength issues. We've got, inertia shortfall issues. We're significantly exposed to voltage collapse and trips in the system. There's not a lot of redundancy in the grid. So sometimes being super duper driven by free markets, and the markets will make the right decision. Whilst I believe that's true I think that's true only from the point of view of a developer. I think in order to co-optimize not just price and not just carbon, but also system security, which is effectively known as the trilemma in the industry. I really think where we're going is that, free choice is sort of gone. We need central coordination, which is very much what that concept of renewable energy zones I spoke about earlier in the presentation aims to deliver. And then just in terms of, again, coming back to this topic around where the market is today and where is the market going from the customer's perspective, most customers would prefer a non-intermittent supply. Developers have been reluctant to sell firmed supplies because there's a reluctance, generally speaking, in taking on intermittency risk as a seller. But if you basically sell to RE100 customers, RE100 is a sustainability framework whereby the largest blue chip Fortune 500 customers tend to be signatories to. Those customers are moving away from a cumulative net zero voluntary commitment under RE100 and moving towards potentially hourly matching and hourly net zero. The move from cumulative net zero to hourly net zero, which is expected to become a binding target in 2030, is absolutely completely changing everything about who we are, what we do, what our products are, and where we're going. So voluntary buying and power purchase agreements purchased from, the likes of data center owners and other RE100 signatories is completely changing. And that is a development that is happening globally, not in Australia. It's happening in the US. It's happening in Australia. And in order for any company, a company like myself, to stay on top of things and to create products which resonate positively with customers, more analytics, more trading, more AI, more smarts are absolutely needed to be able to find a way to deliver hourly net zero. This is sort of another slide illustrating the same point. So this is from one of our customers. We're basically seeing customers ask more and more for wholesale products using renewable energy supplies here. So it's becoming more and more about math and less about just engineering and just building things. It's about integrating the upstream engineering with the downstream trading and portfolio management, and and delivering solutions where hourly matching from a carbon neutrality perspective is delivered cost competitively. And then to sort of wrap it all up, strengths, weaknesses, threats, and opportunities. Quick business school SWOT analysis here to wrap things up with. Grid augmentation in Australia, fully locked down, fully supported, money committed, but really coming into threats now, but really a government hot topic issue, right? So if I look at an electricity bill in Australia, my transmission line item is probably 50 to 70% of the total electricity bill. If I look at my bill as a residential customer in the States, transmission charges are usually 10 to 20% max. So what that means is that whereas energy transition and climate change is probably, let's call it page 2 news in the States, because the hit on the end consumer during challenging times of inflation and cost of living pressures is disproportionately high. We tend to see even more pushback potentially from an inflationary point of view in Australia than you actually do in the States. But there's lots of opportunities here. I think our market structure and negative prices gives rise to a significant and tremendous market opportunity for new customers to grow, right? So I think whether you're a hydrogen proponent or you're a data center, I think our resource-rich environments, the ability to locally source steel, people, and clean energy supply, lithium, and so forth makes Australia a very attractive destination. But one of the key threats that we're seeing here is people. To give you guys an idea, we had an EPC contractor walk away from one of our projects, walk away from a $189 million project because they couldn't find enough people. We needed 430 people to actually go in and install the piles, the trackers, put the models onto the trackers. We're starting to see projects fail because we cannot find people to actually physically do the work. That is ultimately driving up prices. And government interventions such as renewable energy zones come with strings attached. So whilst I think what I'm saying here is that we need more government intervention in order to maximize the effectiveness of investments, the government is arguably, in my view, becoming involved where it shouldn't by providing some very prescriptive guidelines around things like community benefits, community support, local sourcing of materials, some of which is completely unattainable and impossible, and has the potential to really destroy a project. And then in terms of threats, and it's either a good thing or a threat, change in law, right? I think the theme of what we're seeing here is that the only constant is change. Markets the world over will continue to evolve as the rapid transition from a primarily thermal generation world to a fully or close to fully migrated carbon-free world unfolds. So key themes, and then we'll sort of wrap it up. So this is probably the most important message here, which is around policy alignment. So again, coming back to the example I just gave around an EPC contractor walking away from a $189 million contract, there's not enough people in the country. And this is the most interesting factoid in the entire presentation, in my view. And we did this internally here. Wanted to just take you guys through this to just illustrate a point. If you take all of these renewable energy zones, all of which are committed, they're progressively being built out between sort of like now and 2030, 2032. If you line up all of these different renewable energy zones here, and at the right time, bearing in mind that we need things like electricians to be involved. So in Queensland, for instance, we need one licensed electrician for each 5 workers physically doing work on a solar farm during construction and commissioning. Elsewhere in Australia, that ratio is 10-1. So in New South Wales, for instance, we can have 10 installers for each 1 electrician. But once we rack and stack all of those renewable energy zones on the eastern seaboard of Australia that I showed you guys, and once we and assuming every single electrician in the country works in renewable energy, we still have a 516% shortfall in total electricians to deliver on the energy transition. Let that sink in for a second. We have, assuming every single electrician in the country, which is completely bogus. Of course, you're going to have electricians working during on a residential construction job or building a new house and so forth. Assuming 100% of those electricians just do renewables, we still have a 516% shortfall in electricians. So what's the main message here? I think it's great to have an energy transition policy. It's great that we're committed to the transition and achieving 83% nationally, or even more at the state level. But unless you integrate immigration policy and upskilling policies, i.e., retraining new people, having apprenticeships put in place, and increase immigration, Australia will never deliver on its vision. There just isn't enough people. So again, just coming back to Queensland real quick, Queensland is also hosting the 2032 Olympics coming up in 2032. They've got to build stadiums, airports, hotels. They've got to do a whole host of infrastructure investments. Where are the people who are going to build the Brisbane Olympics going to come from if they're already committed in the energy transition? So where I'm getting to is that, immigration is a hot button topic in the U.S. for obvious reasons. I'm not going to really touch on that political hot potato. But I think the next world war is not going to be around the things that we see on CNN or Fox or elsewhere. It's really going to be around people. For any Western country to become independent and less reliance on Russian oil or gas or Chinese lithium or whatever the case might be in terms of tariffs and nationalization, we just simply don't have enough qualified people to do the job. And the same exact thing happens in the States. I think the shortfall in the States, I haven't done this exercise, but I've read up a lot on the topic. I think similarly, there's a significant shortfall in people who are appropriately skilled to deliver on this. Second point is the missing middle, again, around policy. So we've got lots of short duration storage that's been commissioned. So if you look at this sort of graph here on the right, as you can see, most storage built up until sort of now has been 2 hours or even less than 2 hours. But increasingly, we're seeing more and more 4-hour projects come online. And towards the back end of 2030, we're even seeing 8-hour projects. So all of our storage to date is predominantly short duration storage, but there is an absolute need from a system reliability point of view to have longer duration storage be put in place. That's what we deem the missing middle here in this world, where on one bookend you've got LFP, lithium-ion batteries, and on the other bookend of the spectrum, pumped hydro, which is basically 24/7 storage. Governments are going to have to pick winners here, in my opinion. There's just way too many technologies. The entire market is too fragmented. So definitely think there's a role to be played here around picking winners and making sure that the right outcomes are put in place. And then lastly, but definitely not least, is the energy transition. If you look at investment certainty, the U.S. is currently ranked number 1. A bit biased because of the way the metrics are done here. Australia is ranked number 5. But as we normalize these numbers, so this is the absolute rankings. I mean, U.S. has a great regulatory environment, builds a lot of storage, but on a per capita basis, Australia is now number 4, and the U.S. is number 30. So whilst the U.S. may be number 1 on index because of its sheer size, again, on a per capita basis, the U.S. is significantly lagging. It's interesting to see how the numbers change on a per capita basis. Australia, in aggregate, sits at 5, but on a per capita basis, sits at 4. But there's a lot more work to do in the U.S. than Australia per capita. I mean, we're seeing the U.S. sitting between the Philippines and Tunisia, which, needless to say, is not where it should be ideally. And then lastly is sort of the theme we talked through about today, and it's a good segue to Q&A here. Is deregulation dead? I very much would love to hear people's views. We used to talk about open access forms. It was all about freedom of choice. We've now worked out that leaving people to their own devices results in things like cannibalization. So I guess the last question I'll pose to the audience as we move on to Q&A is deregulation dead?
Hmm.
And that's what I had here for today.
Wow.
So happy to open it up to Q&A. Hopefully that was informative. But yeah, happy to take any questions here.
Oh, great presentation, Leo. A lot of stuff to digest. And okay, questions for Leo. Again, the priority is given first to students. Students, please introduce yourself. And Leo's covered some very interesting topics. Students, question. Sajjad, go ahead.
Hi, my name is Sajjad Al-Shimari. I'm a student in ESE. Thanks for your presentation. It's a lot of information. We get it. Just only I'm asking one question about the wind turbine, offshore and onshore. You say about the charging from the wind, from the solar. It will be losing the money. What about the wind turbine? They are overcharging. What happened to them?
I think I mean, I think wind is an interesting story because wind, I think, definitely plays a significant role as well. The wind profile is much closer to a north peak shape, so it's very complementary to solar, which is more a peaky shape. Storage tends to sort of fill the gaps between wind and solar. But I think the interesting challenge with wind, I mean onshore wind, I think offshore wind is probably, in my view, too expensive. But even onshore wind, I mean, I can build solar and long duration energy storage more affordably than I can build wind on a dollar per megawatt basis in terms of capex. So to me, as an economist making these purchasing decisions and structuring decisions, if I can overbuild my solar and have whether it's multiple 4-hour battery energy storage systems combined into an 8-hour system, or if I can just buy a 12-hour plus system, I can do solar plus storage more cheaply than I can do wind. So why would I buy wind? I think is a question I would say.
Thank you.
Very good. Great. There's a Olaf. Olaf, you have your hand raised. Please unmute yourself and ask the question, sir. We cannot hear you, Olaf, if you're talking.
Am I audible now?
Yes, you're audible. Yes.
Yeah. I'm Olufemi. I'm calling from Nigeria. I'm a prospective student. I work with Abuja Electricity. I really appreciate this lecture is very informative. I appreciate it so much. My first question is I would like to ask, is there anything like losses in Australian energy sector? What's the losses rate? Is there anything like KTC and say losses? And also I would like to ask, what advice does the speaker ask for Nigerian energy sector, please?
What advice for Nigerian what?
Please come again.
Just what advice for Nigerian what? Just repeat your last question again, if that's okay.
Okay. I said, what advice, is there any advice for Nigeria energy sector?
Or energy system. Any advice?
Yeah.
For
Energy sector, electricity distribution, generation, transmission, and distribution.
Yeah, look, I think the themes are pretty clear here. I think a clear policy that incentivizes the right type of generation is probably the best advice. Obviously, I think having competitive markets is an essential component. But government support, I mean, one of the biggest impediments, at least from an Australian perspective, is investments and investment certainty. I think banks and investors are naturally conservative, and they don't always see positives in things like negative prices. So negative prices are seen as a threat. But from my point of view, I'm actually indifferent as to whether prices are positive or negative, because I've co-optimized storage and solar or storage and wind. So whether prices are positive or negative, if I lose in solar because prices are negative, I gain that spread back in storage. So from an economics point of view and from a analytics perspective, as long as I've done my job and right-sized all my different technologies behind a connection point, then I don't care, to be honest. But I think your classic institutions like capital providers, hedge funds, private equity funds, and banks are not of the same view. They're actually quite simplistic and conservative in their approach. And then just circling back to your initial question, yes, there are losses. I think early on in the presentation we talked about, the reses closer to load centers being filled first, and then that sort of staggers away into more and more distant connection points further and further away from load centers, and that's particularly because of losses, impedance in the system, really.
Okay. Let me read a question on the chat box from Larry
Right?
Cranford.
Like what percentage is the losses?
How big are the losses? Well, the losses vary by location, so they're called marginal loss factors. Losses can actually be positive, negative, meaning you can actually make, depending on how the residual settlements stack up, you can actually make money from losses. So if so instead of generating 100%, you can actually generate 102%. So you can actually make funny money from settlements, but on the other side of the spectrum, you can have 25% losses. So for instance, that first example I gave you guys around Broken Hill to Sydney, that 730-kilometer distance between the farthest away solar farm in New South Wales and Sydney being the load center, that loss factor is closer to 30%. It's, I think, 28%. I'd hazard a guess and sort of say I'm guessing that'll be the highest losses in the system, but northern Queensland might have some other assets I'm not thinking of at the moment. But yeah, that Broken Hill asset far away from Sydney, 28% losses.
Yeah, can you express that as a percentage of what is delivered? I think that's what he's looking for. How does it compare percentage-wise with average?
Yeah, look, I think it's difficult to have an average, because in the States, the way the locational marginal price is constructed is that you've got an energy component, and then you've got a congestion component, and then a marginal losses component. So in the U.S., the formation of the clearing prices themselves from whatever market operator includes congestion charges. In other words, takes into account the firmness of your generation from the point it joins the grid to the hub of the grid. But the loss factors are embedded within the marginal clearing price. In Australia, everyone in New South Wales gets the same price. Everybody gets the same regional price. But then there is an exogenous variable called marginal loss factors, which then, like a scalar multiplying out a number, which then gets multiplied out by the price. So if I'm, let's use an example. If I'm a generator in New South Wales, everybody gets $100 for that particular trading interval. If I'm near Sydney, I'm probably getting 99 out of the $100. If I'm in Broken Hill, I'm getting $72 to reflect that 28% marginal loss factor.
Excellent. So I'm going to read off some questions. Larry Cranford, on slide 10, it appears there was a significant period in late 22 and early 23 where energy prices spiked greater than $300. What drove those price spikes, and what has been done to mitigate that?
The answer is, I mean, those spikes have to do with the Russian incursion into Ukraine, which led to significant shocks in the underlying gas price. And because oftentimes gas still sets the marginal price, all generators get that high price. So, because gas markets are internationally linked, we saw that in Italy, we saw that in Spain, the UK, the US, we saw that everywhere. I think the US is probably more shielded from gas price rises than most places in the rest of the world because of fracking and shale that's domestically produced in the States. But LNG-linked countries like Australia, like Qatar, Japan, Singapore, and really all of Europe are generally exposed to spot gas prices through LNG. And because of the Russian invasion, LNG prices spiked, and all jurisdictions exposed to those spot price outcomes in gas markets had prices spiked. So the electricity price is nothing more than the gas price times the heat rate of a particular generator, which is why an increase in gas prices leads to an increase in electricity prices. What have we done about it? The answer is nothing. I'm surprised Putin still hasn't been shot, to be honest, but but here we are today. I mean, I think that would have probably fixed the energy crisis and inflation a lot more quickly than some of the other envisaged remedies. But yeah, no one's done anything so far on that one.
Question from Saul Z. How do you manage the development risk with this degree of volatility shortage in the EPC, labor market, and land lease process? How do you manage the risk?
With great difficulty and a whole bunch of white hair that's starting to show up on my head. I mean, look, I mean, that's probably the hardest question one can possibly ask, but appreciate the question. Look, I think a strong team processes and staying on top of regulatory change and changes along the way, and relationships basically, and advocacy and so forth, and good planning. So I think volatility in our case in the Australian case is probably a good thing. Banks here are actually a little bit less conservative than the banks in the States, in that we don't have to pay off our project finance debts during the contracted period. Obviously, the level of contracting you choose to take on alleviates a lot of the issues arising from exposure to high volatility. By the way, great question. And yeah, Australian power, another did you know, Australian power is actually the most volatile underlying commodity in the entire world. But that really just goes to having the right contracting mix and the right asset mix. Coming back to my examples around, I don't care if prices go up or down, because I've got an appropriately sized battery energy storage system sitting off to the side. So if they go up, I make more money on both ends. If solar goes down, but volatility goes up, I make more money through the BESS. So there's different financial and physical means of ultimately hedging yourself against adverse market outcomes, whether that means low, high prices or otherwise. But I think it's unforeseen change in laws that change things unpredictably, that are the risks that are much harder to manage, really, from my point of view.
Okay, here another question from a student. How does Australia approach to clean energy development address biodiversity and environmental protection in sensitive areas? I'm concerned about the depletion of the Great Barrier Reef off the coast of Australia.
So I guess, well, let's sort of go through the question. I guess I don't necessarily see a lot of linkages between the Great Barrier Reef and something that's being developed 1,000 kilometers away in the middle of what otherwise is desert. So I think there's really, really strong environmental protection measures in place. No project can go ahead without a development application. A development application considers native fauna and flora, considers things like migratory bird patterns, and endangered species. For instance, you can't build a wind farm where there's migratory birds at any time of the year going through that region, because obviously we don't want to be seen as an industry that is destroying the natural habitat. But look, I mean, I think there's it's not a straightforward answer to your question, but there is robust protections in place through the development application process. And like I said, I think most development is happening pretty far away from populated areas. And because Australia looks a lot more like the southwest of the United States than the lush and green woods of Pennsylvania or New England. A lot of the stuff just really doesn't apply as much as it probably may in the U.S., given the amount of land that's available here. I mean, to give you an idea, I was looking at a bit of land this week, and the land we were looking at was 2/3 the size of Belgium in the middle of nowhere. One plot of land. So it's a different ball game altogether. Yeah, I mean, we're able to sort of find really, really huge plots of land and use economies of scale and absolute scaling up as a means to lower prices and sort of offset that tyranny of distance, coming back to that Broken Hill to Sydney example I talked about earlier.
Wow. I think this will be the last question in the chat box from Adi Diran Babalola. Considering the threat in offshore wind electricity generation of 25 gigawatts, despite government incentives, will the 2050 net zero be achievable if this 2025 gigawatt is a factor in the net zero plan?
Look, I don't think any of the targets are going to be achieved, whether you're talking UK, US, or Australia. I'm really skeptical about our collective ability to reach any targets. But that really, to me, comes back down to supply chain and resource availability. I think the limiting factor, whether you're talking AI or hydrogen or renewable energy, I think is people and local supply chains. And unless we fix that and we train more people and the government stops playing politics, which in my view will never happen, it's really hard to see how we get over something like 60-70% of renewables. I think we'll slowly get there, but the residual bits between sort of 80 or 90% to 100% is truly expensive. You need a lot more storage and a lot more capex to be spent and the grid to be augmented. So I don't think we'll get to 100. I reckon we'll peter out at somewhere around 85%. But that misalignment in terms of lack of vertical integration on policy, people, and supply chain relative to energy policy is what's going to bring everything undone, in my view, across the Western world.
Yeah. Well, listen, we have to wrap it up. And excellent talk, Leo. Just thank you for being up so early in the morning. Probably the sun is shining pretty brightly now. But I'll tell you what, you made the case for why Australia probably is such an envious position with the rest of the world. You got so many things nicely tackled. You could be an exemplar for the rest of the world. Never mind the fact that the population of Australia is almost equal to the population of Greater New York City. So we are. So you have a lot of land to play with, but it's really very well presented. Excellent job. Thank you very much.
With zero prep, so thank you.
Tell you what, I shudder to think how great it would be if you just prepare 5% of your time. But
thanks everyone again. Thanks for the opportunity, Rudy. Looking forward to doing this again.
Okay, well, listen, folks, we have a seminar next Monday at our normal time, 12 noon, and the topic is going to be about electrification from EPRI. So look forward to seeing all of you next week. And again, thank you, Leo, and keep the Lehigh flag flying.
I'll see you around next time, Rudy, when I'm over your way.
Oh, yes. I'm sorry I missed you last time, but we're going to meet you with you. All right. Thank you all. Good evening and good morning.
Thank you.
Have a good day, Leo.
Thanks. Take care. Bye-bye.
Bye-bye.